Good morning, traders. Welcome to the stock market strategy video for Monday, November 30th, last day of the month. Pretty interesting stuff. The last several days we've did absolutely nothing. We've mostly had an inside day. Take a look at the daily charts on the spider. You can see that here. Bunch of dojis way up high. Are we double topping? Not really. Not at the moment. I mentioned that we look like we are forming an M formation. So an M top, which is always a lower high from this previous high here. And then we still got to work on that right side. But as of right now, we're still hovering above. That's not a bad sign. It's not a good sign either. It's just the markets just really has no clear direction at the moment. We do have continued market divergence. I'll show that to you also. I just took out a couple of weekly charts. Just want to show you where we are. And when you get further out on a weekly, and then if you get to a monthly, it does take time to develop when you see divergence. It could be weeks and weeks before market divergence actually kicks in. So we could have a rally between today and all the way into the new year before we see any type of selling. Does that mean that the market's not going to sell off? No, not at all. We do come into tax selling after this a couple of days of window dressing. I would suspect that the markets would be up going into today and tomorrow. Mutual fund inflows do come in. But we also remember that we're going to have to reposition portfolios for end-of-year tax selling, which that does happen the last couple of days, last couple of weeks going into the Christmas holiday, okay? And that being said, you have basically a flat market, maybe up 1.5% to flat. I would suspect that the tax selling will be a little bit more aggressive this year, taking advantage of any of those losses, okay? So keep an eye on that. We are really starting off with a neutral tone to a slightly bullish bias to the upside today. If the markets can give us a decent pullback, I would probably look to buy dips today and tomorrow because of mutual fund inflow. And then we'd like to see see where this market is headed here. I think we're going to get into a good 2 to 3 weeks of volatility where you can really capitalize on as far as traders are concerned. You can capitalize on making a couple of bucks here. So let's keep an eye and keep the pallets dry here. Remember, we've gone nowhere here. So let's just see how the day progresses going into today and tomorrow. Also, China is getting hit again. Now, China stocks, and in China, if you look at the Shanghai, the Hang Seng, they're all in the red again. They're starting to sell off, and nobody's taking notice of that. So keep an eye on watch China too as well, guys, because that's still a canary in the coal mine here, okay? All right, so let's go right into the weekly charts of the IWM. These are the weekly, so they're going to take a little bit more time. We do have a head and shoulders that are developing right now. You can see he has a nice bear flag, head, left shoulder, right shoulder. Now, if we start getting to this upper end here, then obviously that's going to be negated. But we do have a pattern, a bearish pattern that has not triggered at the moment. We need to get way down below here before this head and shoulders pattern develops. But again, bearish patterns are starting to form in the higher time frames. Here's the daily. Finally, we got above the 200-day moving average, and any pullback into here, into the 200, I would probably look to buy only because it could be playing catch up to the other indices. Remember, the Russell, secondary leader here, not leading at all this whole year. You could see that, okay? Let's keep an eye on the Russell today and tomorrow for a possible buy setup. Transports, weekly chart. You can see here another head and shoulders pattern. Neckline is right around here. And you also have airlines are not doing well, railroads, trucking not doing well. And they're coming to some seasonal strength, which they're not showing any type of seasonality strength at all. So this is a big concern of mine, especially going into 2016. So let's see if we get a little bit of a pullback. Maybe the transports can be a bit into the next couple of days. But remember, guys, tax selling is coming in. That could actually trigger some good selling in the next couple of weeks. And then markets kind of recover going into the end of the year, okay? But we'll see what happens here. Another bear flag here you can see. So I'm still cautious here. You could see this big symmetrical triangle. We are getting into the apex here. So I am very, very cautious. I'm a cautious bull here. I have no problem shorting the market, but I'm not looking to short the market. We're coming into some seasonal strength. I want to let the market prove to us that we are indeed headed lower, and that at the moment has not happened, right? We've had about 5 or 6 trading days of really going nowhere. So the markets are silent, and if we can get a push up when mutual fund inflows, they're going to run the stops. And by running the stops, you're going to get a big spike up above 2,100 in the S&P, okay? Diamonds, You can see here another good. This is a good formation here on an M formation. You can see that kind of building that right side of the shoulder here. Neckline would be at the 172.50, but you can see all the little dojis. Aside from this one big candle, we've gone nowhere. The last six trading days, we've gone absolutely nowhere. So good half of the month already of November, we've gone nowhere. All right, keep an eye on things here. This is going to get interesting. Qs, again, same thing. Bunch of little dojis. We've gone nowhere. But watch the technology sector. We mentioned gold and UUP. Here's gold, the GLD. I mentioned we go lower, and sure enough, we are going lower. I'd like to see us break 100, and that's why we start really get into buying some of the gold in this area and averaging in. Don't buy everything in one shot because it breaks 100. Okay, you really want to be averaging in when the market is going in your favor, headed north. But you can average in if you make a commitment on a dollar amount of gold that you're going to purchase, and that's it. If you start averaging in and you continue to average in, and you're overseeded your price point on gold, well, then you're averaging into a losing position. That's two different ways of averaging in. All right, that's the losing way, and the other way is make a commitment on gold, and then make a dollar amount and stick to it. Okay. But you can see here we do have a little bit of market divergence here, positive divergence here forming in the GLD. But the bottom line is it's going to be the dollar, UUP. And you can see here UUP broke out of this big formation. And here you could even, let's just call that nice little pattern that I was showing you before. And that's that nice big bull flag and a nice big flagpole. And now we broke out here. So if this dollar continues to move higher, commodities are going to continue to sell off, okay, until the dollar pauses and starts to pull back, or we get some uncertainty and inflation kicks in. Remember, I had that video last week. Keep an eye on that video. It's a great video. Take a look at it. I do think gold's going to be a really good buy. Do I think it's going to be in December? Not sure. We're going to start watching, but if gold does break 1,000 in the GC contract and 100 in GLD, that's going to entice me to start looking to pick up a little bit of gold here, okay? Hope it helps everybody. Be careful. Use your stops. We'll speak to you tomorrow. Take care.